Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for January 18, 2009. AccendoTraders.com, effective video, technical analysis, trade plans delivered daily. Each time we come together, we work on preparing ourselves for the next trading day by looking at our watch list and revising our stops and alerts. But we always want to know what's coming down the pipe as far as earnings, economic news, splits. On the weekend, we want to read some of the experts, their blogs, their newsletters to see what they have to say as far as the direction of the market, check sectors and the indexes. We always scan for new trades, set alerts for new trades, but most importantly, by having a trading plan, we have time to spend with our family. So the week that was ended down for the week. We did have a little minor short cover rally starting Thursday afternoon, kind of going into Friday. Friday was basically a V down. Gap up, down, gap up, went down, and then up for the day. So we'll see. But overall, what we saw this week was a renewed concern over the strength of the financial sector. A lot of it had to do with what was going on with Bank of America and Citigroup. But again, the financial sector, as you can see here, dropped 16% this week over, again, what's going on with the credit and also their ability to raise capital. I mean, that's what the whole TARP is supposed to be about, capital, and that's what they talked about last year about people having to raise money and whether or not these banks are going to be able to do that. So in an effort to do that, we had Citibank basically selling controlling interest of Smith & Barney to Morgan Stanley, and people saw this not necessarily as a merger, but again, Citigroup trying to raise money. Citigroup also announced that they're going to be splitting into two units to try to become more viable. What's important about that is Citigroup, over the years, had bought everything to become into this huge conglomerate, and now it's trying to downsize. And then here we have Bank of America. First last year they bought Countrywide. The government forced them to buy Merrill Lynch. So now they're growing again. And Bank of America reported its first loss in 17 years. And that's not including the Merrill Lynch deal that they wanted to walk away from, but the government basically said we'll take care of all their losses. So Bank of America is saying that they need another $20 billion in TARP money. December retail sales were atrocious. They dropped again 2.7%. But more importantly, this is the sixth straight month that the retail sales numbers have dropped. We also saw our initial claims climb back above 500,000 after 2 weeks being below that level. So again, the credit concerns, the economy, and then we have talk about our stimulus package at $800 billion, and that's actually there, so it's built to grow. Our new president-elect is talking about the need to act fast. And finally, we had our earnings things begin with Alcoa, and it was just bad. They didn't meet. They already announced last week they were cutting jobs. So certainly the renewed concern about the earnings season. Remember, people were saying, well, we're pricing it in. We're just going to drop the market hard last year. That's what they did in expectation of how bad fourth quarter earnings are going to be. Well, the fourth quarter earnings season started off with Alcoa and the market going down. So did we really price in bad earning results? We are closed on Monday for the MLK holiday. There are nothing scheduled for Tuesday, but of course, remember that is the inauguration day. No news on Wednesday. A bunch coming out on Thursday. So you can see really we're really light on economic data this week. However, look at us on our earnings. You see, again, the earnings season has kicked off. On Tuesday, we've got Johnson & Johnson, IBM. I only mention IBM because IBM actually sparked a rally way back there in November, so maybe they'll be able to do it again. But look, we got Apple this week. All the news going on about Steve Jobs and his job. Was it Wednesday or Thursday with his health? Saying that it's more serious than he thought. Apple got down and rally. We also have Google this week. So we certainly have some companies that can move the market. Before we look at the three major indexes, I want to make sure we take the time to remind everybody that in 2009, we're really going to be using Twitter to get our alerts as a part of our 30-day challenge that we have. So I want to make sure that you guys check out twitter.com/AccendoTraders to sign up to get our free alerts. What's important to point out about our three major indexes is something that we've been talking about for a while, and that is that the stock market is basically consolidating. So here we are on the Dow, and you can see that right around 8150 is the bottom of our consolidation pattern, and 9,000 basically is the beginning of our consolidation pattern. Yes, we broke out above it early November, late October, and mid to late November we broke down below it. But in reality, for 3 months here, we've just been in this range. And the market sold off here, came right back and caught a bid. The buyers came back in right at this consolidation range. Will they take it back up? Not sure. They did every other time. But again, we have these fourth quarter earnings that we have to deal with to see whether or not they're going to like them. Now here's the NASDAQ. You can see that same type range, around 1,500, 1,490 for the base, and around 1,600 for the top of it. Broke out a little bit. Remember the NASDAQ was leading us up here? And certainly we broke out of it here. Somewhat down here, but really we're in a nice tight range. So the question is going to be, are we going back up to the top? Don't know. We'll have to see how these fourth quarter earnings, especially with the NASDAQ. We've got Apple and Google coming up. And here we are with the S&P 500. Again, right around 850 is the base of this area, and around 950 is the top. We caught our bid. Are we going back up? Certainly could, but it's going to be up to how the traders respond to the news. And we might have another light trading week because of the inauguration, and both of our other light trading weeks led to the market going up. Let's go quickly through our sectors. The ones that caught my eye are agriculture, stayed strong through the pullback, still above the 50. Oil, stayed strong through the pullback, still above the 50. Gold, pulled back hard, but look at that gap up there. So gold could be ready to make its run. We always like to watch gold. Look at the weakness in banking that we talked about with the credit concerns. On the flip side, we got biotech looking like it's fine, maybe ready to break up above 4,300 here. Airlines, we've talked about airlines often, looking like they're ready to make a move. There's earnings this week on UOL. And on the flip side, we have railroads to the downside. Talk about specific stocks in the full length. Okay, as we move to the educational portion of our video, as we wrap it up, last week we talked about the fact that we talked about the transition that we make as traders, that when we initially looked at a bunch of charts, it was just a bunch of colored bars, rectangle shapes going up and down, green or red or white and black, depending on what colors you use. And that over time, even if you don't know anything about technical indicators, and there is a transition in the market right now where people are moving away from technical indicators because they're lagging indicators, and they're getting into more about volume and what they call price action, and just making trading decisions on what they see. Now, these are short-term traders, typically day traders, but these people are interacting with the charts and making decisions based on what they see. Compared to what they were doing in the past, we've graduated into becoming traders. Now, what was the difference is a little bit of market knowledge and, more importantly, experience. Most of us don't realize that every single day there are opportunities in the market every single day. The question is, do you have a system in place to take advantage of those opportunities, to help you recognize those opportunities, and again, and the most important thing is, to enact upon those opportunities, because they're there. Some opportunities are going to be greater than others. Some opportunities actually won't work out, and you need to get out. But they're there every day, and it's just a matter of whether or not you're watching, whether or not your vision is clouded by any of your emotions or your personal bias, and whether or not you're able to just follow your plan, enact your plan, execute your trades, and move on and take advantage of what you see. But you're not going to be able to do this until you actually start experiencing it and actually interacting with the market, which is always a great leadway into that. You should paper trade, always paper trade before you actually put any type of real money into your trades. So, as always, I want to thank you guys for watching our video. To get the full version, since this is our YouTube version, you want to go ahead to accendotraders.com/subscribe podcast HTML. We had 400 downloads last Sunday. That is great. Hello, 400 people. If you want to get this video every single day, go to accendotraders.com video HTML. We did raise our prices for 2009, and we're bringing more content, more great technical analysis trading videos, but here's where we can become a member of Accendo Traders and get our daily videos with our stock trades every single day. Our blog, and of course Twitter. We've got, again, intraday information going out there, and as we're building up the list, we're gearing into our Accendo Traders 30-day challenge. It's going to be coming back in February, where we're going to be actually sending out some alerts through Twitter also. So make sure you check out and sign up for our Twitter account.